The invisible backbone. The invisible backbone. Foundational industry. Foundational industry. Boom and bust cycle. Boom and bust cycle. Margin squeeze. Margin squeeze. Not one size fits all. Not one size fits all.
So as we're recording, June 18th, 2025, things are pretty tense between Iran and Israel. And you see it immediately in the oil markets, right? Almost instant reaction. We've seen Brent crude futures, that's the big international benchmark, jump over 4%, pushing past, $76 a barrel. And West Texas Intermediate, the U.S. one, it did pretty much the same thing, a really sharp rise. The message is just crystal clear, isn't it? Middle East tensions flare up.
And oil prices spike fast.
Exactly. So what does all this volatility, really mean for you, for the global economy? Today, we want to do more than just report the prices. We're doing a deep dive, trying to understand why this industry, which gets a lot of criticism, still holds so much power, even now with the shift to clean energy. We'll look at how crude turns into, well, everything around us and uncover some of the maybe hidden investment angles, the traps too, and ask, is this just another short-term shock or maybe the beginning of something bigger?
Yeah, and what's really fascinating, I think, is just how deep oil and petrochemicals run. In our whole industrial setup, we tend to think, okay, fuel, cars, planes, but the real story, the pervasive thing, is the petrochemicals. They're kind of the invisible backbone of, well, modern life.
Yeah.
Your phone casing, medical supplies, even parts needed for, say, wind turbines. Think about South Korea. They don't produce any crude oil, not a drop.
Right, zero domestic production.
But since the 70s, the government there really strategically built up refining and petrochemicals. Now they're a global giant in that space. Over there, they sometimes call oil refining the rice of industries.
The rice of industries, wow.
Yeah, it just shows how foundational it is. It's not just energy, it's the base for making almost everything else.
That analogy really hits home. It makes you see how vital it is, even if you're not pulling it out of the ground yourself. And, the basics of refining, it's not just about gasoline for your car. Crude oil, think of it like, a raw ingredient you process. You get the main products, gasoline, diesel, jet fuel, those are key. But then there's this byproduct, naphtha, often overlooked. And this is where it gets really interesting because that naphtha, it's not waste. It's the absolute essential starting point for the petrochemical industry. It gets turned into the building blocks for plastics, synthetics, the stuff in, like you said, phone cases, paint, medical tubing, so much.
And this huge interconnectedness, it brings up a big point about investing here. It's famously volatile, cyclical.
The boom and bust.
Exactly, that classic pattern. Global economy is booming. Demand for fuel and materials goes up. Prices rise. Profits look good. But here's the catch. Building a new refinery or a big petrochemical plant, that takes years, 5, maybe more, billions of dollars.
Huge investments, long timelines.
Right. So by the time these massive facilities finally come online, the economy might have already cooled off. Then you get oversupply, prices crash. Yeah. It's tough timing. And this delay, this timing challenge, investors call it the lagging effect.
The lagging effect.
Yeah. It means often the smart money, or maybe the brave money, gets in when things look bad for oil. Because they're betting that today's oversupply or low price eventually leads to tomorrow's shortage. It's playing the long cycle.
That makes sense for strategy. But within this whole oil complex, do all the players react the same way when prices spike like they are now? Or are there winners and losers?
Oh, that's a really crucial distinction. Absolutely. When crude oil prices jump, like we're seeing, the refiners, they often do well. They might have bought their crude cheaper earlier, and now they're selling the gasoline, the diesel, at these higher market marinas. Their margins widen.
Okay, so they benefit from the higher selling price?
Generally, yes. But the petrochemical companies is often the opposite story. Their main raw material, that naphtha we mentioned, suddenly just got way more expensive for them to buy.
So their input cost goes up.
Precisely. It squeezes their margins.
Yeah.
So a spike in crude can be good for refiners, bad for petrochemicals. It depends where you sit in the chain.
So it's not one size fits all. Even in a price surge, you've got these different impacts playing out, not always obvious.
Exactly right. And yet, despite the volatility, despite these different pressures, oil stocks often remain pretty appealing to certain investors. Why? Well, often it's the dividend yield. They tend to pay out relatively high dividends compared to, say, tech stocks.
Ah, the income aspect.
Yes. So for investors focused on income, especially when the broader economy feels uncertain, like now, that steady dividend check can be quite attractive. A bit of stability amid the bumps. And, if we zoom out again, yes, clean energy is the future. That trend is undeniable. But the transition, it's not a straight line. It's not happening tomorrow.
It takes time. Decades, maybe.
Right. And in the meantime, oil and petrochemicals are still just
Right.
fundamentally critical. Think aviation fuel, global shipping, the plastics in hospitals, asphalt for roads. Demand isn't vanishing overnight. It's changing, yes, but it's still massive, which is why these global events, these geopolitical flare-ups, still have such a direct, powerful impact, and likely will for quite some time.
So it's this complex picture, isn't it? You've got the inherent volatility, the cycles, but also this deep strategic importance way beyond just filling up the tank, and these really important differences between refiners and petrochemical makers. There's a lot to track.
It is, which really brings us back to that core question that the sources are wrestling with, and frankly, everyone watching the markets is asking now. Is this current spike we're seeing, is it the start of a new sustained upcycle for oil and petrochemicals, or is it just another short-term jolt in a world that's always, throwing curveballs? What do you think when you weigh all this? How does it change your view of where things might be heading? Something to consider.